Welcome to Momentum Monday. Today is April 27, 2025. And we're looking at the chart of the Nasdaq 100. And last week, we saw a follow through in all major indices. There was a quick shakeout here on Monday, where the indices actually traded below their volume weighted average price since that low. But then there was immediate bounce back and 4 days of heavy buying just based on some comments from the White House that there are some trade deals in the making. The truth is that, so far there haven't been any deals that are signed, and there are even no negotiations with China, but the market being forward-looking and probably a little bit more optimistic right now than it has to be, is just acting on that. And last week we saw a significant recovery in many stocks around the world. And here's the weekly perspective here that maybe we should even go to monthly. So you can see that actually the low from that correction so far, from that bear market so far, kind of found support near the highs from the previous bull market here in 2021. So this 400 remains the really important support level that could get in play later in the year. During the correction in early April, almost anything was hit, and we've talked about it numerous times. Even gold had a slight pullback to its 50-day, and then it was the first one to recover to new all-time highs and to follow through. But we've seen similar actions in foreign stocks, which have been outperforming significantly US stocks due to the weakness in the US dollar. For example, this is a chart of Germany ETF. Pull back to its rising 200-day, and then very quickly now it's back to its all-time high. Here's a chart of the European financials ETF. The same, they kind of look the same. Pull back to the rising 200-day. Now it's back to new all-time highs very, very quickly, quick recovery. So we can't really talk about a bear market in when it comes to European stocks, because they never really went below their 200-day, and they're already back to the 200 to their new all-time highs. So definitely a lot of strength in Europe as some of the capital that was invested in US stocks, especially the so-called Magnificent Seven tech stocks, is just going back home and getting invested in European equities. In US, the one sector that really, one of the sectors that is standing out is cybersecurity. And I think the leader there is Palantir. It was one of the few growth stocks that never really went below their 200-day moving average. And it was among the first one to recover above their 50-day moving average. And now it's only 10% away from its all-time highs, which is a significant achievement, especially considering their rich valuation. But also there's just so many catalysts behind this stock just in the past few weeks. I mean, they earned a contract from NATO, and they just continue to find ways to grow, and definitely is currently the momentum leader, the leading momentum stock. So one to pay attention to, but it is not the only cybersecurity stock that is doing well. We have also CrowdStrike, almost back to all-time highs, acting extremely strong here above its 50-day, and probably is gonna test its all-time highs at some point. Zscaler setting up, building a new huge base here, and here's the weekly perspective. So a breakout above 217, would be new 52-week highs here. We have also Okta, also building a new base here with a pivot around 115. So there is a lot of strength in the cybersecurity sector, and something to keep an eye on, and probably own a few stocks in the field. RBRK, I think another one that is like a recent IPO in the cybersecurity space, working on a new base, a little bit more volatile. And if we go to Latin America, also you can see that it's already back above its 200-day. Mexico also super strong. Argentine banks. Here's Argentina, by the way, setting up near its 52-week highs. Is a weekly perspective. That's actually all-time high. So there is still a lot of strength around the world. There are quite a few stocks, quite a few markets that are still in a bull market around the world. Not the US. The US is still in a correction mode, just judging by the indices. And this could very easily be just a bounce, a bear market bounce. It's still below declining 50, declining 200-day moving average, and I wouldn't be surprised if we see the indices testing at least their declining 50-day, and then see at least an initial resistance maybe for a day or two. With that in mind, we have to admit there has been a major change in character. The indices are now trading above their volume-weighted average prices since their all-time highs. So the average buyer since that level here is earning money. So this is a change in character, and then we're seeing so many stocks acting constructively, breaking out or setting up. One of the major breakouts from last week, Take-Two Interactives, also one of the stocks that briefly dipped during the market correction, and now it's among the first one to break out. It is a relatively slow mover, but definitely among the price leaders so far. And in the very short-term perspective, I think after some back and forth, we'll see a test of at least of the declining 50-day, and why not the declining 200-day moving average. But I remain kind of skeptical from a longer-term, medium-term perspective, just because of the headline risk that we have regarding tariffs and trade policies. One has to be really, really nimble, because we can easily continue to see significant volatility in the market, and big one-day corrections, one-day shakeouts, even if this recovery continues. And if we see the indices recovering above their 50, above their 200-day moving average, and starting to set up above them, obviously, one has to become even more bullish than you are right now, because the market is telling you that it's pricing in something that is not obvious. Obviously, there are people with inside information, or people that are just knowing something that the majority doesn't, or seeing brighter future if we're seeing those higher prices. There's still a lot of work to be done to say that this is the beginning of a new bull market. As of right now, I consider to treat this market as in a corrective market, and I remain nimble. I continue to mostly take short-term trades, and it's not just intraday trades now. It's just my trades are lasting a few days right now. So I've expanded my holding period, as this reflects the current nature of the market, as we're seeing follow-throughs. And so far, recent earnings season has been really interesting. Like companies like Tesla missed estimates by a lot, and yet they traded higher. The stock is still in a downtrend overall. So It's just very choppy, very volatile, but also an excellent trading vehicle. Stock like Google, they beat estimates, by a significant margin, gapped up, but then sold off. So, they've been sellers on this gap. So we continue to see it's not like a wild bullish price action. So that's why I just think that this might end up just being a bear market rally. But as of right now, I'm mostly looking on ideas on the long side because this is what's showing up. But I'm open-minded and I'm willing to change my mind very quickly and just play the short side if sellers show up. This is all for this week. See you next week.